accounting class. In this section, we shall continue our discussion about payroll. We shall take a brief look at the accounts needed to enter the records for employees' wages into the accounting system. So, let's get started. The first point that I wish to make is that records of wages and salaries need to be kept for each employee, even though we shall only enter summary data into the computerized accounting system. Remember that gross pay is made up of basic pay plus any overtime, bonuses and other payments, excluding reimbursement of non-taxable expenses. The gross pay is then reduced to a figure for net pay by deducting various statutory taxes and voluntary contributions. At the end of each payroll period, there will be a summary sheet produced. This sheet is the one that will be used to extract information to enter into the accounts. The sheet is referred to as the payroll register. This register may have been produced internally by a payroll department, or it may have been produced by a third party if the task of producing a payroll has been contracted out. A single journal entry can be made from the contents of the payroll register. Clearly, wages represent an expense, so a wages expenses account is needed. The taxes and other deductions can be recorded in liability accounts until they fall due. A business would not normally pay these until they were required to do so. The cash account will be used to pay the employees. Most firms will probably do this through electronic funds transfer, EFT, directly into the employer's account. Only the total would be entered as a credit to the bank account. The wages expense account will show the complete cost of wages and salaries. An employer can determine how much detail is required. This is of use when records are then used by managerial accountants. The wages expense account can be subdivided to show basic pay, overtime and other bonuses as 3 separate totals. An employer may choose to record the additional employer costs in a separate account. There is no fixed rule to be followed. The employer uses the most appropriate method for their business records. Liability accounts are usually kept for each type of statutory and voluntary deduction. In a few states, such as Florida, the only income tax deducted is federal income tax, and this liability will be recorded in a separate liability account for income tax. If the employer conducted business in a state where there was state income tax, then this would require another separate liability account. If the business was situated in a city that imposed an additional income tax, then this too would require a separate liability account. Social Security taxes are deducted and recorded as a separate liability from Medicare taxes, which are also deducted from the employee's gross pay. Voluntary contributions will also require separate liability accounts. Most employees will choose to have 2 deductions in this category, a deduction to help provide for additional health care and one that will go towards a pension fund. So how will these be reflected in the accounts? Remember that first rule of accounting, that debits must equal credits. This must apply to the journal entry that is prepared from the payroll register. The debit goes to the wages expense account. Credits are made to the cash account, to any income taxes payable accounts, to Social Security payable, Medicare payable, health insurance, pension, and any other liability accounts for deductions. At the end, the journal will balance. All of the credit entries are going to add up to the figure that we have entered for wages expense. This is the end of the second session on payroll. Thank you for watching and for listening.